Hello everybody, my name is John Locke and I'd like to welcome you to The Winning Trade. But first, the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and please make sure you are aware of all your risks prior to placing any trades. Also note that in the presentation we are using hypothetical computer simulated trades and or results. They're believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance and success coach with Locke in Your Success LLC. And myself and my team are here to help traders win in the market and in life as well. And today I'm here to guide you into the realm of high probability income trading. Now in a moment we're going to be going over the winning trade, but before we do, let me quickly explain what I mean when we talk about an income or high probability trading strategy. An income strategy is where we put ourselves in a position to generate profits through the passage of time rather than depending solely on price movement to go in the right direction, meaning we can often make money whether the price goes up, down, or sideways. Now, this doesn't mean we're going to win all the time, but it does mean that our probabilities of winning are much higher than they normally might be otherwise. Now, when you find that you want more information as you're following along, that's fantastic. Simply contact us at lockeinyoursuccess.com. That's L-O-C-K-E in yoursuccess.com, or ask a question in the comments on this video, and we can direct you to where you can find more information. All right, so let's move on. The winning trade we're looking at today is called the Rock. The Rock has been and continues to be our best performing rule-based strategy by far over the last 10 years. And that's because the Rock is what we call an adaptive strategy, meaning it's traded differently depending on the implied volatility skew, which is why it performs so well over such a very large variety of market conditions over such a long period of time. And if you don't know what implied volatility is, that's okay. We're not going to get that deep into it during this presentation. Just sit back, relax, and enjoy the presentation. Now understand that the Rock is a rather advanced trading strategy, meaning that sometimes it's a little bit complicated to understand in such a short time period and in a single demonstration. That's why we have a Rock strategy trading course. But simply follow along the best you can, and if you have any questions, feel free to contact us. Okay, so this is a trade that we do on the Russell 2000, and for the purposes of demonstration, we're going to use a $50,000 trade size, which I understand for some people can be rather large, but keep in mind that we can trade this with as little as $5,000. So let me show you the trade. So for those of you who may be new, this is an analytical software called OptionNet Explorer. And what it does is we have the options expiration cycles right here along the top. We have our option strikes and calls here along the left side. And then we go to the lower half, we have our options strikes and puts. This shows us the mid price of our options. This shows us our implied volatility, the delta of the options, and so forth. And in this cycle, we're going to be trading the July 2020 expiration cycle. It's the monthly cycle. It expires on July 17th. We enter this particular trade 30 days to expiration, and 30 days to expiration for July was Wednesday, June 17th, 2020. We do all of our adjustment points or checks at what we call 1530 or 3:30 in the afternoon New York time, meaning that this is not a position that we monitor all day. We check it once a day. If it needs an adjustment, we do it, and we pretty much ignore it the rest of the day. As a matter of fact, I usually recommend people are out doing something else so that they don't sit here and watch the market and do something foolish. So it's not very time intensive to manage. This here is the analytical graph, and in the dark blue here that looks like a triangle, that is what we call our expiration line, which is essentially the value of the position at expiration. So right along the bottom we have our asset price. Right now our asset price is at 1427.44. You can see it up here, 1427.44. This red dot represents the asset price and the profit and loss, as is projected here along the right side of the graph. And as the price goes back and forth, You can see the value again at expiration with this dark blue line. And then we have this thinner line that goes from green to blue to red. And this line here represents the projected value of the position as of today at any price point along the bottom. All right. As time goes by, what's going to happen is we can add extra lines in here. And as time goes by, you can see that our current value line tends to shift up here. And when you go back down here, you can see that it kind of drops under if you look at the pink. You can see how the value of the position is going to change, again, at any given price point. And that's a projection that the software makes into the future, which isn't always 100% accurate, but in general, that's what happens. Let's go back to one line. This is what we would call starting position. So in the rock strategy, we have a $50,000 planned capital. We're going to start with, in this case, an iron butterfly, and we're going to have our short strikes at 1400. Now, these run usually about 20 points under the asset price, and it could really be anywhere from 10 to 30. In this case here, it's about 27 points. And then once we add or model putting on this iron butterfly, it's going to have a certain delta. In this case here, the delta without the call is going to be minus 16. And then we're going to flatten the delta out by adding a call. Now, generally, if we're going to be in an out of the money call, we want to be slightly positive delta, which is why we're running about positive 9. So this is going to be our entry position. I would like to note, however, this is not always the entry position in a rock trade. Sometimes we enter in what we call a double butterfly configuration, and the way we enter is going to be dependent on the implied volatility skew. And we can determine that through what the delta of the original position is. So if I take this call back off, we have a delta of minus 16. Now for a 10 lot butterfly, that's 30 days to expiration. That's extremely, extremely flat. A lot of the times it's up around 180, 200 sometimes, 250 sometimes. And if it was up that high, then we would be entering this position differently. But the way the delta number is now, which represents the implied volatility skew in the markets, this is essentially telling us that we should be in a butterfly call type of configuration. So that's how we entered. Now to the downside, we're essentially going to roll this down if we get to the point where we have a problem as far as risk goes to the downside. And again, that's going to vary depending on the market environment. In this environment, you probably wouldn't run into too much of a problem, or I probably wouldn't touch this thing until around 1330, 1320-ish. Other than that, we just leave it alone. And then to the upside, we're a little bit more aggressive with our up adjustments. When we get 10 points past the long strike here, or to 1460, we will be doing an upside adjustment to this, and that adjustment is going to roll forward. The other upside adjustment we might do is going to be from a negative delta. On this analytical software, we're running it with minus 15. So if I hit minus 15 negative delta, then I'm going to be making a correction. And the first correction I'm going to make is going to be moving the call deeper in the money. Then we're going to start doing some verticals in here at like for example, a 1400, 1410 vertical, something like this, to make those corrections if needed. So first move the call, then do verticals. All right, so let's just go day to day with this. It's only 30 days. So we'll kind of click through and we'll show you how the position develops, and you can watch how the T+0 line shifts and so forth. So let's go to the next day. And I'm just going to click through these, and you can kind of observe here. You see we're drawn down a little bit. By Tuesday, we're pushing up here towards the edge of the position, and nothing to do, right? Now, some of you who know the Rock program, you might be saying, well, what you're saying is a little bit different than the original guidelines of the program, and that would be correct. One of the things we are doing, or one of the things that we do, or one of the benefits of being in our Go membership, is that we track this trade along with 11 other trades for a total of 12 trades Monday mornings. And every Monday morning, I show you the way that we're handling the trading strategies in the current market environments. So a lot of the times, the general or basic rule set makes perfect sense, and that's going to go for most of the time. But when we get things that happen that are unusual, or as environments start to change, or if we're dealing with a different analytical software, which we are here, then all that stuff is thoroughly explained in the Monday morning webinars, and we talk to you about the changes to make so that you can make the most out of the current market situation. Let's just go day to day here. All right, 43-point down move. You can see we have gained a little bit of profit and loss, so we're on our way. Nothing to do here. Again, according to original guidelines, we did have, we're generally going to do a rollback when we get more than 10 points under the short strikes. But one of the things I'd like you to observe here is this does not have a downside problem. In other words, the market can go down or the Russell can go down, gosh, another 50, 60, 70 points, and there's really no issues here to the downside. So there's nothing to do here. So let's move this forward. So here is our first adjustment. We are 18 days to expiration, meaning we've been in the trade for about 12 days. And if you look at our delta number, we're using minus 15 as an adjustment point here. And that being the case, we are due for an adjustment. So what we're going to do is we're going to take this call and we're going to roll it or move it deeper into the money. So you can see the call now is at 1540. We bring it down to about 1470. That brings us to pretty much flat. Now we're going to just carry on. We go another 2 days here. We're back over minus 15. And this is what happens. Even though the price didn't move very much from when we made our last adjustment, what tends to happen is as time goes by, you can see this T+0 line raising up here. And again, that's the advantage of time decay. And we're making money. So that's good. But the shape of this is going to change as time goes by. And that being the case, our delta is going to change. And sometimes we hit upside adjustment points, even though the market's going down, which is the case here. So we're going to take this call. We're going to move it deeper in the money once again. So now we're minus 16 delta. Our call is at 1470. Roll it down to 1430. That brings us pretty much neutral delta once again. Let's move forward. Here, once again, if we go to July 7th, our profit and loss is up to about 29.65. Our delta again is more than minus 15. So here is, we're at 1430. We're going to take that 1430. We'll move it down to 1390. We're back pretty much flat delta again. And we will carry on. Here on July 10th, once again, you see we're over minus 15 and we're still within the tent here. So we're going to just move this call and a little bit deeper in the money. So you see we're at 1390. We move it down to 1330. Bring our delta to just about neutral, slightly positive. And the following day, we get our profit up to $5,876, which is above what we call our reduced profit target. So let's talk about the risk parameters in this position, which we didn't talk about going in. So this was a $50,000 planned capital position, and typically the rock trade, it has a 20% profit target and a 20% maximum loss, meaning that number would be $10,000. Now, that profit target is not a fixed profit target, it's a variable profit target, and that's going to depend on the type of positioning we're in. So we did what we call M3 or modified rock type of positioning on this thing when we started, and we were in M3 positioning when we left. And when we're in M3 positioning, we're going to reduce the profit target down to our $5,000. And we're clearly over that now, so we're going to exit. Normally, if we're doing rock configuration and getting into that type of positioning, then we're going to go for the full 20% or $10,000. The other thing that I'd like to point out is this is the maximum capital level we had in the trade for the whole duration of the trade. When we started, we actually had much less than what we have now. Right now, we have about 17.5 in the trade. So, we're making $5,800 on $17,500 of actual risk, which is actually a very, very substantial return for that period of time. So, perfectly happy to exit out here and take our $5,800 and run. Now, I haven't demonstrated a rock trade in a while on the winning trade, although we demonstrate them regularly on our options trading for income Monday morning webinars within our Go membership, but I haven't done them here. So I was asked how the strategy is doing for the year with such a crazy year, and we came into the year early with a grinding up market, and then of course in March when the coronavirus stuff hit, we had very, very severe down moves, and since then we've been getting very, very wide daily ranges in the market. So let me just show you how this has been doing for the year. So this year, we came into January with the grinding up market, and we did pull a 20% for January. The return for February was 1.9% or almost break even. And then we had the really, really big down move in March, which did tag our maximum loss. And it just happened to hit exactly the maximum loss. It wouldn't be unusual for us to get out maybe at 19% or maybe sometimes 22 or 25% when we get these really big down moves. But this one just happened to hit 20 even. But that was, again, due to the severe, severe speed of the move. And occasionally we take losses, so that's not a big deal. April came back in, 10% gain, May 10% gain, June 10% gain. And this is primarily because we've been taking our reduced profit targets and because we've been in our M3 or the butterfly call positioning. And then July we had 11.7%. So all in all, for the year-to-date return, we're looking at about a 44.83% on our planned capital, keeping in mind the only month we actually came close to our planned capital numbers was in January. The rest of the year, we've always had a $50,000 planned capital, but the actual capital in the position has been hanging somewhere between $10,000 and $20,000 pretty much since April. So fantastic, fantastic returns on the type of risk that we're taking. And that is the Rock strategy, our highest performing strategy over long periods of time. This episode's winning trade. If you like what you see, I encourage you to join us within our Go membership and discover how you too can follow along with this and many other great strategies as they unfold during our weekly options trading for income trade update webinars. Also, I'd like to mention that all of our memberships are currently open. We actually have 4 membership levels. We have the Go membership or the Guidelines Options membership that brings you from a beginner options trader to a highly skilled Guidelines options trader. We have a Market Outlook webinar where we discuss what's going on in the marketplace and what our thoughts are for the market in the upcoming week to help our more subjective traders adjust to varying market conditions. And then we have our trading performance membership, which shows you how to perform your best trading and looks at the mental aspects of trading. It's really awesome. And then, of course, we have what we call trading with the pros, and those are for those who like to advance to a master level in trading, where we take the market conditions into account and we dynamically adjust to what's going on in the marketplace so that we can maximize our returns. So I encourage you to go to lockeinyoursuccess.com, L-O-C-K-E, inyoursuccess.com, and check those out. If you have any questions or comments or anything you'd like to see on the next winning trade, all you need to do is simply comment on the videos below so we can get those questions answered for you. And we encourage you also to come over to thewinningtrade.com. That's thewinningtrade.com. One word, where you can find past episodes of The Winning Trade as well as a lot of other fantastic information on how to skyrocket your trading results through income trading. Thank you, and we'll see you on the next winning trade.